Good morning, traders. Welcome to Monday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, make sure to check the news. That way we know what's going on and when it's going on. So as far as the news for today goes, we don't have a ton of stuff, but we do have a lot of the OPEC meetings and all of that going on from yesterday. Now, coming into today at 10 o'clock, we have the pending home sales for October. That's forecasted at 1%. The previous was negative 2.2%. But that's really the only big news announcement that we have today. We do have Chicago PMI at 9:45 and a couple other minor things at 10 o'clock and 10:30 and some auctions at 11:30, but there's nothing really else going on outside of 10 o'clock. So that's going to be the big zone that we're keeping an eye on with that perspective. So with that out of the way, now we can jump on in and start taking a look at the daily brief for today, 11/30 of 2020. First up to the list is going to be the NASDAQ, and the way that the NASDAQ is moving is giving us a couple clues of really both sides, and that's where things get a little bit interesting, because realistically at the top we had this blow off on the highs of the channel, and after it blew off on the top, it looked like it was going to come back down, but then we had that weird gap opening back up above it, so it kind of gapped back up and tried to reconfirm, but that also failed, and now we're right back down. And I love the fact that it came underneath and held it as resistance a couple times first, really showing that there's some good emphasis there, that the level is still there, right? With this gap above it and all of that, seeing those extra little bounces really adds a lot of confirmation. So with this downward continuation, we've got the larger channel at play, and we just failed the cycle above the channel highs. So realistically, it would make sense that the market's going to want to try to challenge the lows, right? We'd break above, and usually they're going to break through the bottom. So that gives us a zone of interest below at around 12,184.50, potentially a little bit lower around 12,140.50. That's back around S2 as well. But that would be a break underneath the channel low. So think of it as kind of like an overswing into an overswing, or an overshoot, as I love to call them. So the overall movement that we've got going on, it just seems a little bit more indicative to the downside. This is a nice bull rally, and the buyers are obviously breaking up to the highs, right? They're trying to get this move back above the tops and start shifting this trend to the upside. My fear is that this is a little too, well, it's just too little too late. The bears are trying to take back control again. It's possible that the bulls do come back in, right? If we look at the overall move to the upside especially, we can see that the initial push didn't have any volume at all, right? Nobody was really interested, and that's a good sign for bulls. When it did follow through, we saw a little bit of a perk in volume, and since then it's been fading off. So it's fairly obvious that sellers were coming in on the pop, whether they were buyers taking profit or new sellers, we don't know. But either way, the short side just makes a little more sense. If we can get a pullback down towards the lows, back towards 12,184.50, then we've got a zone of interest to try to kick it back off, back up towards those 12,300s next. Then over to the S&P, and we've got it's a similar situation, but man, is it much more range bound on the S&P here. It's still staying fairly low, and it does look like there could be some form of falling resistance here. We've broken out of it so aggressively, though, that even if it does come back, the support's probably just going to be right back down at the lows anyway. So there's not really a need to draw a channel here at this point, just because the support's already there. It's at the bottom. Where it stands, I think the big thing that we have to see here is, with this lower high and now a push down, do the sellers have enough to make another lower high, right? This was a really, really close lower high to that one. Now, if the sellers are going to try to take it lower, they're going to want to see a little bit more aggression, not necessarily coming way back up to the highs there and trying to keep it going down. And that would be poised more for like a bear channel, which is sort of kind of where it's getting stuck, at least at the moment. But realistically, from a range perspective, which does fit this a lot better, we had the breakout above the previous consolidation, and the market returned back to support. Now we've pierced into it a little bit and then immediately rejected back up. I don't know about you, but in that context, that seems like it might be shifting gears relatively bullish. I still don't want to buy way up here, but a little bit of a pullback down towards those, 3610s, 3612s, then things get a little bit more interesting, because now we've got that horizontal structural support, the channel support, the higher low potential reversal, etc. But if the sellers are going to take this lower, it's very likely that they're going to be gunning back towards the bottom. Then from there, there's just so much support that they're going to have a really hard time getting through it. If it does, then we might end up with a nice little free fall. But right now, there's just so much in the way. Looks like buyers are trying to come back in, but this is their last shot. If they fail here, it's probably going to keep trending lower, and it wouldn't be a surprise to see us back down below 3600s within the next day or two if it fails. Swinging over next to gold, and we can see some pretty nice balancing going on after that big flush to the downside. We had that huge blow off on, what was that, the 27th, and with that big flush below 1800s, landed all the way down to 1776, found a bit of support, pushed back up, and then collapsed back through. But when it started pushing back through the lows again, you'll notice the first time around was really decisive, right? That was a big breakout, came back, held it as resistance, but then they failed to go lower, right? We've got a higher low, and that's not necessarily a problem for the shorts. Obviously, sellers who sold here probably got their targets. Those candles are teeny tiny, so the risk reward was likely hit. But now that we're seeing that higher low and a rotation back up, this move up was pretty juiced up. So if the buyers can show a bit more continuation to the upside, get a secondary bounce off of this channel, then we've got a shot at rotating back up towards the 1790s. From there, then it's, again, back on the table. Sellers probably going to be pushing back down to challenge the lows again. Typically, bear trends like this don't just give up on a dime, so it wouldn't be a surprise to see, once it got back up there, to start rejecting back lower off of the pivot point, trap highs, etc., into those 1800s. If it can go a little bit further, maybe a big blow off up towards the 1810s where the top of that big bear breakout happened, would be possible, but that's going to be a big zone of resistance up there too. So more likely that we transition sideways. Better to be a buyer on the low, seller on the high. Just kind of stay out of the middle. And right now it's smack on the middle. Looking for a little more continuation up from here if the bulls can get it, but if they fail, we're probably going right back down to the bottom. On crude oil, we've got some good sideways movement here with a possibility of a bear structured channel working its way down. Obviously, when we zoom out, this has been a very, very bullish move to the upside. It's hard to ignore the severe amount of bullishness. And obviously, from a grander scale, looking for a slightly wider pullback down towards the 4350s, 4375s, makes a lot of sense. But from where we are right now, given that the market had tried to break lower, just missed the bottom of the channel, pop back up, and now we're seeing sellers trying to drive back down again, it would make a lot of sense to see the sellers finish the drive, get the job done, right? Get the test of the channel lows and sort of finish things off. There was a gap down over the weekend, and that gap still remains open, so that's looking to get filled at some point. And obviously the range highs being at around 45.70, there's a really, really nice chunk of structure up there. On the bottom edge, 44.68, 44.70s. The market's got to try to hold up here, but again, looking at the way that this is forming, it would make a lot more sense to see it get one more push down, finish that objective, get everybody's profit targets taken, and then reverse up. So in the nearer term, it makes a little more sense to me to be looking for shorts back down to the bottom, finish the job, and then look for it to rotate right back up. And, maybe we can push back up towards those 46s and get a full-blown reversal day. That could be fun. Over on the euro, it's taking some notes from Bitcoin, it seems. The euro is just screaming higher. If we zoom out, we can see pretty obvious this is a nice little breakout point of the channel, and now we're back, right? We're back to it as resistance. This is sort of the proving ground. If the sellers are going to push back, or in this case, realistically, buyers taking profit, right? This is going to be the area that they're going to do it from, right? At the bottom of that area, kind of pinging off of it. It doesn't, it makes perfect sense. And now that we're seeing this kind of potential topping resistance setting up in the same spot, there's a lot of things saying that this market might be a little bit overdone. It's obviously incredibly bullish, right? So don't count it out by any means, but just be cautious really of buying too high. The market's already above R2. We've got a huge amount of resistance up here. It would make a lot more sense, and I think a lot of buyers would favor looking to buy a dip back down towards those 1.197s to see if they can get filled back down there. And if it wants to go a little bit further down, then you've got the gap fill that was left behind over here. That's going to be at around the 19,540s. That's going to be a big one. So, I mean, if the market does want to pull back, take some profit on this rally higher and start getting a dip down, that's going to be a hot spot, filling that gap right on the pivot point. I mean, just eyeballing it, you can see there's rising channel support there. So everything is kind of lining up for that deeper pullback, and that's going to be the big zone of interest going into today. And then finally, we've got Bitcoin, and Bitcoin is rallying very aggressively higher. It seems like this is kind of all aboard the last stop before the all-time highs. You know what I mean? We've got that big move to the downside. We've got that big flush. And if we zoom out a little bit, the way that it flushed down and so aggressively rolled back up would lead me to believe that this was a liquidation run, right? Sellers who were stuck, shorts who were stuck from back here, I mean, even from back here, trying to get the breakdown. This gave them a chance to get out of break even. And you can see when the market came down there, it's obvious there was a huge amount of support that came in. There was a big rejection. So that is a little bit more validation of that break even run, especially when it came down a little bit further and started hitting these other areas and just rocketed right out of there. It's showing that a lot of traders potentially got out of break even. Now, a lot of shorts might still have tried to take this a little bit lower. It's obvious they were building a nice zone of resistance, little head and shoulders there. I'm sure there are shorts inside of this looking to get it to go back down. But now they're getting squeezed back to the upside. And when Bitcoin out of all the markets is squeezing to the upside, this is when the rocket boosters start getting launched, right? This thing can go catatonic and go crazy. So the rejection that we're seeing at 18,700s or so, it makes sense to see some profit taking up here. This is a nice zone of previous structural resistance, and we're back. And so with this bullishness to the upside, we can see that this channel is giving us a little bit of a clue that there are some buyers trying to come in, but at the same time, we're hitting a much larger area than just a shallow little bump off of it. So at the best the sellers can hope for is that this goes sideways. We're probably not going to reject back down, but sellers are going to be looking for it to go a bit more sideways like this. Longs are going to be utilizing this opportunity on the dip to try to get back in for another rally back up towards the highs, towards 19,000. Because again, if this can break out, it can go crazy. If it does want to pull back a little bit deeper, which Bitcoin does love those flush pullbacks, it looks prime for a flush pullback down towards like the 17,600s, or man, a really fast wick down and then right back up towards those 16,400s, a little bit above it. Just a fast flush down into those supports. That could be the spark that really lights the fire back towards the all-time highs. Of course, if it happens, we're way up here right now. So realistically, buyers are going to be looking to buy the pullback, buy support zones, buy previous structure. Everything is lining up a little bit lower down towards the 18,000s at the moment to see if we can find some buyers back in. Alrighty, well that's going to do it for today. Like we always say, stay safe, keep those stops in play, and let those winners run. Hope you have a fantastic day of trading today, and we will see you all tomorrow. Thanks.